The opening scene is quiet. It is just you and a single crisp $100 bill, close on the bill between two fingers, soft, hopeful light. In the vast, intimidating world of finance, this small sum feels like a whisper against a roar. Many believe you need a fortune to enter investing. They picture Wall Street titans in sharp suits, making decisions that ripple across the globe. But that is not the only story. Your story can begin right here, right now, with that exact $100. This is not impossible wealth overnight. A simple beginning, a disciplined journey, the incredible power of starting small. That $100 is your ticket. Your money can work for you, not just the other way around. Today you can make a decision that echoes for decades. Your journey from saver to investor starts with this single choice. Let's strip away the complex jargon. Investing is simply using your money to buy something that can grow in value. It's about ownership, buying a tiny piece of the future. Forget the noise of fast money and risky bets. This is your script for a calm, steady kickstart. The goal is to plant a seed today that can grow into a mighty financial tree. Your $100 is the first character on stage. Let the scene begin. The most critical step in investing is a mental shift. We often see $100 as something to spend. This is the consumer mindset. To become an investor, see that $100 not for what it can buy today, but for what it can become tomorrow. Think of it as a seed. Planted in the market, it can grow. This is the power of compound growth. Your money starts earning its own money. It's quiet and gradual, but over years, small contributions can become a financial tree. The first battle is in your mind. The best time to plant a tree was 20 years ago. The second best time is today. Your $100 is the catalyst. Embrace the patient gardener, not the frantic gambler. Now that you have the right mindset, you need a place to plant your seed. Your investment platform. The key is choosing one that's simple, safe, and has low costs, so more of your money goes toward growing. There are three main types of platforms excellent for a new investor. First, a modern brokerage app. Many offer fractional shares, letting you buy a small slice of an expensive stock with your $100. Look for zero commission fees. Second, a robo-advisor. This automated service builds and manages a portfolio for you based on a few simple questions. Finally, you can invest directly in an exchange-traded fund, or ETF, a single investment that holds hundreds of stocks. Choose a stage that makes you feel empowered, not confused. Once you have chosen your stage, it is time to cast the players in your financial drama. The single most important rule here is diversification. Do not put all your eggs in one basket. If one company soars, you do well. If it stumbles, you could lose everything. Diversification is your safety net. Spread your money across different investment types to reduce overall risk. Imagine your $100 as a pie. Create a few different slices. Stocks, higher potential growth with more volatility. Bonds, generally safer and more stable, cushioning rocky markets. A common starting mix puts a larger slice into stocks and a smaller slice into bonds. With just $100, ETFs are your best friend. Pair a total stock market ETF with a total bond market ETF. For example, $80 into a stock market ETF and $20 into a bond market ETF. If you choose a speculative slice like cryptocurrency, keep it very small, perhaps 5%. And experimental slice with high risk. For the vast majority of your journey, focus on the core slices. Broad, diversified funds of stocks and bonds. This balanced approach builds resilience, weathering inevitable storms while capturing long-term growth. The secret to successful investing is not about brilliant timing or risky moves, it is about consistency. The most powerful tool to ensure consistency is automation. Small amounts move to your investment account on a schedule without thinking. This could be $25 every month, or even $10 every week. Automation is like hiring an unseen director for your financial movie. It keeps the story moving even when you are busy. This strategy is known as dollar cost averaging. It sounds technical, but it is simple. Invest at regular intervals. You buy more when prices are low and fewer when prices are high, smoothing your average cost and avoiding peak lump sums. You do not have to time the market. Even pros rarely win that game. Like a skyscraper, progress is slow at first. Foundation, first floors, then day by day, week by week, another level is added. Over months and years, a tower emerges. Each small deposit is another floor added to your financial skyscraper. Modern brokerages and robo-advisors make auto deposits easy. Link your bank, choose amount and frequency, set it, then do your best to forget it. Make investing a default expense you pay to your future self. Automation removes emotion, eliminates procrastination, and puts compounding on autopilot. It is the best way to ensure your seed grows into a sapling, and eventually, a mighty tree. Every great story has its share of conflict. In your investment journey, these will come as market downturns, scary headlines, your own emotions. The biggest mistake new investors make is panicking. Selling during a downturn locks in losses and can keep you from the recovery. Market corrections are normal, not the end. Another pitfall is chasing hot tips or the next big thing. High-flying bets often crash as fast as they rose. If it sounds too good to be true, it probably is. Have an emergency fund. Money in a separate, accessible savings account. Aim for 3 to 6 months of essentials. That cushion prevents forced selling for unexpected bills. It is a financial fire extinguisher. Be vigilant about fees. Fees are silent termites that eat returns. A 1% versus 0.1% expense compounds to big losses. That is why low-cost index funds and ETFs are recommended. Always check the expense ratio. Keep it as low as possible. Avoid panic selling. Resist speculative fads. Build an emergency fund. Minimize fees, and keep your financial story on track. In our world of instant downloads, next-day delivery, we have been conditioned to expect immediate results. In investing, this mindset is your greatest enemy. Investing is not a sprint, it is a marathon. The magic of your $100 seed does not happen in a single season. It unfolds over decades. The most successful investors are the patient holders of well-chosen investments. After you plant the seed, you do not dig it up every day. You trust the process. You provide water, sunlight, and you wait. Growth feels slow early. Across years it becomes substantial. There will be highs and lows and noisy headlines. Your job is to ignore the daily noise. Do not check your portfolio every day. Commit to occasional reviews. Let time and global growth do the heavy lifting. Your $100 begins a multi-decade partnership with time. Patience is the superpower that lets compounding work its magic. Let us cut through all the theory and lay out a simple, actionable plan you can execute today. Pick a well-regarded, low-cost brokerage app with fractional shares and commission-free trades. Download the app, create an account, provide personal information for verification. Once approved, link your bank account, transfer your $100. This is the moment your money officially enters the stage. Decide on your investment, a single total world stock market ETF. Place a buy order, and use fractional shares to invest the full $100. You have now planted your seed. Set up automation, recurring investments, or automatic deposits. Set $25 monthly into the same ETF. This set-it-and-forget-it approach builds habit and uses dollar-cost averaging. You have officially become an investor. We have reached the final scene. The lights are dimming. This is not an ending, it is a beginning. You do not need a fortune or to be a financial genius or perfect timing. All you need is $100, a clear plan, and the courage to take the first step. Start today, grow tomorrow.